Hey, welcome everybody back to today's Market Explained podcast. It's a 4-star podcast series and video series as well. And normally we do a market commentary every month, a couple of times, but then we mix in to that set of content interviews with major players in the economic system who are covering really interesting subjects that we think our listeners would like to hear about. So today we have an interview episode, and today we have a really interesting character, Jason Bordainick, and Jason is the managing partner of Hudson Valley Property Group. He's a Stanford grad and really interesting entrepreneur. So welcome to today's Market Explained, Jason.
Thank you, and thanks for having me. Looking forward to this.
Yeah, looking forward to our conversation today. Now, you have created a company that is involved in affordable housing, and how we're gonna understand what you mean by that and what your company actually does. But what I really want to focus on to begin with is how you got to the point where you founded this company, and it has to do a lot with, in my view, your early background. And you actually, Jason, you started a company in your dorm room.
Yeah, I've been an entrepreneur since I was 18, and yeah, I love the experience of building a company, of starting it, and having a vision and piecing it all together. And yeah, my first company, as you mentioned, you're correct, was out of my dorm room. One of those cliche stories, and it was out of my own experience. With struggling to find a place to live. At that time, this was around the year 2000. It was early in the internet development of how it's being used, but at the school, you use classified ads to find places to live. And it was a very inefficient process where you would look through papers, you would look on a variety of static websites and collect information, and then walk the streets looking at apartments. And today that sounds crazy, but at the time that was the norm. And so I had an idea at the time of a better way to do it. And I submitted the idea in a business plan competition at my school. And the idea was that we were going to create this online marketplace where local property owners and property managers would list their properties, and students would come on and search from the comfort of their dorm room or wherever they were, and see the available listings, apply for leases, and really make the process a lot more seamless and save them time. And it was one of the winners of the contest. I worked on it over a summer to develop the initial software and set it up at the University of Virginia, which is where I went to my undergrad. And it was a big success. I think like 80% of first year students, you call it first year at UVA, you don't say freshman, you say first year, but your freshmen or first year students used it in their search, and it was successful at University of Virginia. And from there, built a model to bring it to universities across the country and expand it out to over 130 universities and helping more than 2 million students find housing each year. And that company ultimately was acquired by CoStar, who's the owner of apartments.com and a variety of other real estate technology services. And my company, which is now called Off Campus Partners, is a part of CoStar. And so I had that tremendous experience of building a company from scratch that was addressing the needs of my fellow students, and really, the sales pitch, of selling something that is not there today, the idea of building something to meet the needs. I think that was incredibly rewarding to say, hey, I played a role in that. I knew my future would be filled with more entrepreneurial endeavors. When I thought about it, I really wanted my next endeavor to be something that was on a much bigger scale and a much bigger with more impact. And I didn't know what that meant at the time. I just knew that was what, in my mind, what sounded really exciting and what really got me going when I was looking at different ideas. And when I went back to Stanford, I looked at a variety of business plans and business ideas, and nothing really stuck until I connected with a childhood friend, Andy Cavaluzzi, who's now my business partner, on a project at the time that was a side project. It was a real estate project where we came together, and he was, working on a real estate project and came to me initially for an investment. And I was like, well, it's not for me to invest, but I'll help you raise the money. And we worked on this project to buy a building, not too far from where we grew up, which is in the Hudson Valley, that was, serving a lower income demographic. It was in poor condition, and we utilized various programs to buy it, to renovate it. And what we found was we, one, delivered a great return to our investors, but of equal importance, we made a huge impact on the lives of all the residents. And that was really interesting. And we were like, let's find another one of these. Let's find another one. And at the time, it wasn't thought of as this is going to be like the big idea of where we were going to spend our time. But the more we dug into it, the more we realized that affordable housing is actually a very large asset class. There's about 4 or 5 million units that are under affordable programs in the U.S. today. And really no one's focused a business on professionalizing and institutionalizing this asset class at scale. And that one early project led into a bigger vision of saying, hey, let's build a company around doing these types of projects, but figuring out how we can do this at scale. And these types of projects are one where it's existing affordable housing, where you go in, you put the financing together and you figure out how we are going to elevate the quality of the physical aspect of it, the quality of how it's operated, and then as we've grown, we've really thought about how do we actually deliver even more to our residents. But that's where it all started. And now we run a real estate private equity firm focused exclusively on affordable housing, and the mission-driven company that's delivering, market level returns.
Nice. So that's quite an evolution. So the dorm room was in Charlottesville.
The dorm room was in Charlottesville, Virginia.
Yeah, right.
Beautiful town, and I love coming back. I actually come back in the spring each year, and I teach a class session there, and it gives me an excuse to come back and
Nice.
go to my own stomping grounds. But Charlottesville is a special place.
And how quickly did you make it out to Stanford? Were you doing more development between them, or did you go right away for an MBA?
No, I did. There's about 3 years between. So I started the company, Off-Campus Partners, which was really off grounds. But that I started when I was student at the University of Virginia. I ultimately brought on my partner, and her father actually ended up coming on as my partner, and they invested in. And the setup was actually that I was going to leave the day-to-day business and potentially have an opportunity to come back. And so I left for a few years to gain more leadership experience, more managerial experience. I went through a rotational leadership program at the Home Depot, which was an intentional choice. Was, while a lot of my classmates were going to consulting and to banking, I knew I wanted to run a company and wanted to get really hands-on experience. And so the program, which was originally targeted towards like MBA students at my school, was willing to consider me, given I had started a company already in college. And so I got into this program at the Home Depot, where every 6 months I worked on a different aspect of the business and got hands-on operational experience. And that's what I did before going back for my MBA. And it was a great experience, and I still keep in contact with some of my, some of the fellow peers that work there, and some of them are, running other companies now, and also my boss, who's a very senior, he runs one of the divisions there now. So it's been,
Nice.
It was a great experience and was relevant for the next steps in my career.
Nice. So you found the company in college. Now CoStar owns that. Experience at Home Depot, and then that led you, when you did the MBA, to that situation where you figured out affordable housing could be a great business, You said do it at scale, so to be able to actually make money doing it as well. It's not a charity. But some people think you can't make money at affordable housing, but you're here to tell us that's not true.
Yeah, no, I mean, it's an asset class that's been mismanaged. It's a very fragmented space, and a lot of the owners don't have the scale or the wherewithal to properly run the properties. But it's a real estate asset, and there's value in the asset, and similar to really other areas of real estate, it's there's ways to add value, and this is one where as we've built our company around it and brought sophistication to how we finance, to how we improve the operations and improve the property physically, we're able to take a property that is really, as I mentioned, mismanaged and really increase its value. And similar to other investment models, that's it's a way of making money. And this is one where there's an alignment between delivering value to our investors and also giving a better product for the resident.
So, Jason, you mentioned that you're a private equity firm that is doing development of affordable housing. So, are you in the early days? Were you more involved in the building of the the rehabbing of the properties and all that, or and has that changed now? Is it a different scale?
Yeah. So in terms of our progression, it might be helpful. So we've always been focused on existing affordable housing. There is a supply demand imbalance. There's, as I mentioned, the 4 to 5 million units of supply, and the demand, depending on what study you look at, is like 4 or 5 times that. It's only getting worse. And so we've been focused on really the preservation aspect of it. And we started our business developing expertise on all the programs that are necessary to finance these preservation projects. And we raised capital on a project by project basis in the early years. So the business has always been kind of actually the same in terms of what we do. We've just, we've enhanced our capabilities, and big step functions along the way. I think first developing the expertise of how to execute these types of projects as the developer, and going to third-party capital to do that. And there's various programs that have been utilized, and there's banks that invest into this space as well as other institutional firms. But yeah, we first developed our expertise around these programs of how to buy, renovate, and enhance the units, and then as we built out that track record over about 8 years, our first 8 years, we did probably about $500 million of projects before really going out and then, forming our first fund. So we now run a series of institutional funds that are focused on the space, and so that's really been the progression from sort of first being a developer of kind of knowing how to piece it together to then, bringing in-house the financial capabilities, and then we've built out construction management, we built out a robust asset management, and we have over a 40-member team now with a vertically integrated platform that's doing these projects around the country. To date, we've done over $2 billion of projects, and it's growing from exponentially, I would say, from where we were before, and the need is only getting greater, and our capabilities are getting greater. So it's kind of we're trying to make sure we keep the same quality or enhance the quality as we grow. So not, growing in a smart way, but that's been our progression.
So you mentioned that the opportunity is many, many times what you're involved in as far as size. Why do you think that this market segment has been so overlooked?
It's been overlooked for a variety of reasons. One has been its fragmentation. The average owner in our space is an owner of like one property or 1.2 properties, and so when you look at really the sophisticated institutional capital, they typically have much bigger capital to deploy, and so it's a hard space to deploy capital in. or historically has been. And now there's been groups like us that have been kind of consolidating it. But I think the fragmentation has been one reason. I would say another big reason is some of these programs that we utilize in order to make the investment possible are relatively new. So I think the idea of historically it's been, hey, we need more of this, or we need this improved. Let's throw a grant at this. Let's get subsidy. Let's use another program to help support the previous program. And I think there's been historically a little bit of a skepticism, like, oh, we don't being careful of bringing in new capital or private equity in that is going to continue to operate it, in the way that it was intended. But I think as the need has continued to grow and some of these budgets, have been kind of cut or limited, I think the idea of leveraging the programs with private investment makes a ton of sense. And sort of the public-private approach is something that is not just in affordable housing, but in other areas is kind of gaining steam from a societal level. And I think that the combination of, more players like us who are sophisticated that are able to kind of deploy the capital in the space together with sort of a acceptance that private investment in affordable housing makes a lot of sense. And programs and policy has moved towards that. And then I think institutions sometimes are risk averse. They want to see other ones go in there first and have a good outcome. And so you've seen some early participants. And I think over time it's proven out to be a very resilient asset class. And then during the pandemic, I think accelerated a lot of that because a lot of other areas of real estate did not perform, super well. And they were like, well, what is performing well? And they were like, well, the investment we made into affordable housing has held up. And so I think a combination of factors have now attracted more interest. And we're positioned well as a firm that has both the expertise of knowing how to do the projects the right way, but then also having access to the capital to do it at scale. And then we have, I would say then there's the mission side of it, which is super important. A lot of the agencies, and program is really set up from a mission level. And so you really need groups that understand that and really understand the purpose of why we're doing what we do. And this is all we do. And there's ESG frameworks and metrics that we're following and tracking to make sure we're not just making a great return, we're also making impact.
So this is kind of an emerging segment. So how was the affordable housing segment served before? You've identified some of the ways you operate and others. How was this market served, or was it not served?
Well, it wasn't adequately served. I would say there's been different programs that have come out. Initially there was various tax incentive type programs. They used to be programs where individuals could invest into these projects and get tax benefits. And then about 40 years ago now, there was the creation of the low income housing tax credit program, which has been probably the biggest program for both the creation and preservation of affordable housing. And that's one where banks, are able to purchase credits and get tax incentives to invest into projects such as these. And so that has been probably the biggest program that has come out. I would say on the heels of that, that's a program that serves a subset of the universe. And I think private equity on top of that now expands the opportunity set and allows more units to be preserved, and also allows more populations, more communities to benefit, because there's only so much, tax exempt bonds and credits that are available, and there's various requirements for those. And so what really I would say private equity together with the low income housing tax credit now has expanded the capital that is investing into the space. And I think it's still in the early innings of where it's going, because it's actually one of the largest residential asset classes in the country. And the level of investment is still much lower than other areas, and the need's just growing every year.
Growing every year, yeah. So a skeptic might say, well, gee, this only works because the government gives you tax breaks or subsidies in some kind. Is that partially true, or are you able to make a go of it in some projects without the subsidies or tax breaks?
It requires, I would say there is truth to some of what you're saying. I think where we focus on is the existing supply. And so we're really, when you think of it, this is a huge need, and this doesn't serve a small subset of the population. This is in high cost areas, this is most people. And so we're really, the way we look at it is going to require support. The cost of construction, the cost of a lot of these projects just exceeds what would be viable in almost all areas to what you can do, where you're then restricting what you can charge in rent. So it takes some level of support. I would say that our approach of looking at the existing supply is the most cost effective. So the amount of subsidy that is required per unit that is preserved as affordable housing is much less than what it would be for new development. And so that's really kind of how we're looking at it is, we're going to serve this need in the most cost efficient way and the way that we can do it at the greatest scale. And I think that's how we look at it. But I would say, yeah, there is a need for support from the federal government and, from municipalities who understand that actually, some support then gets leveraged with significant amount of investment into these areas, creates jobs. There's a lot of components, but yeah, I think this is typically, there are some exceptions, as you're saying, where things can be done without, some level of support. But this is definitely an area where it does take, some level of assistance to make it work well.
As time goes on, the private equity groups are getting into it, so it could become more and more to the point where less and less subsidies and less and less support could be needed. It's certainly a large addressable market, so it might eventually evolve to that, don't you think?
Yeah, I think less and less. I think, it'll all depend on a lot of factors, how much, where construction costs keep going and, land costs and just a lot of the factors that go into it. But yeah, I think, and then, yeah, I think we're always thinking about how can we have each dollar go further. And yeah, I think in terms of the number of units preserved and the amount of subsidy that's getting requested, it's less than it was before the advent of the private investment coming in.
So now that we get into it, what are some of the challenges to convert like a hotel or like a vacant correctional facility into housing that could be affordable and desirable?
Yeah, no, this is something that it's coming up as a topic in areas like New York, where there are some of these, types of real estate properties, and there's a huge need for affordable housing. I think when it comes down to a lot of this, regardless of whatever it is today, it's really what's the all-in cost. Some of these, hotels still would require a significant amount of renovations and improvements. I mean, they're not set up to meet the needs of what a full home would have in there. They're more, as a starting point, they're probably more, like kind of like an SRO, single room occupancy. They don't typically have full kitchens, but depending on which setup, I think a lot of the factors is really what's the cost to take it from where it is today to bringing it to a residential unit. And some instances that's a smaller gap to fill between where it is today and where it's going. But I think that's one big question. And then, second is sort of approvals. You're changing the use. You got to get the support locally. But we're seeing in New York City, there's programs now to convert some hotels into housing. It makes sense. It's sort of a case by case basis. I don't think it's a large scale solution, but it's something where you may have a starting point that is better than, where you would be, where you're trying to find land and all that. And so I think that's from the hotel side. The correctional facilities, there's been a couple examples of facilities that are no longer in use, and talk of like, well, what are we going to do with this? I think that becomes really, similarly, you're gonna have to get approvals, but then I think there needs to be the support for affordable housing, because in a lot of these areas, the highest and best use may not be affordable. And so then you have to say, hey, actually, we're going to make the decision to move it in that direction, because that's where the need is, and we don't have. So I think a lot from that perspective, it's really the land, and you're getting mostly with the correctional facility, the land. There might be some quarters there that could be utilized, but in most instances, when the vacant, properties, a good amount of it was obsolete, in terms of the structure there for housing. So you're potentially getting land that could be repurposed, and it might be land that's owned by the city or the state, where maybe the cost basis. So again, it goes back to the all-in costs. And so I think on the correctional facility, you may actually be able to have sort of a free land base potentially, if they want to decide to use it towards housing. But yeah, I think innovation is needed. I think the need is only growing, and where we're focused is only going to be, it's going to be a big part of the solution, but it's only one part. Is saying we have these 4 million units out there. Let's take it. Let's make it nicer. Let's make sure that we don't lose those units, because it's way more expensive to replace them. And then the other thing that we're working on is actually, looking at, and this is more of a longer term plan, because we're seeing cities get into it, is really are there properties that are maybe not under an affordable program today, but are already serving a low to moderate income tenant base, what we would call affordable by nature. We kind of find those properties, go to the city and say, hey, we're going to add this to the supply. And that's something that, for example, New York City has been open to, and that's a way to maybe take that 4 or 5 million units and expand it a bit. And I think that's an area of opportunity in select markets where the cities maybe have resources to do this, and New York City is one of them.
It is. So, Jason, if the market is addressably much larger than what you're able to fill right now, where are these folks living now? Maybe, well, go ahead. Just tell me what your thought is in it.
Yeah. So our properties, when we say what's affordable, it's where our residents are able to live there and not pay, that are of a lower moderate income and are not paying more than 30% of their income. And it's set up structurally to ensure that. And a lot of our residents, but probably about 2/3 of our residents are senior citizens, retired on a fixed income. But a lot of the programs and a lot of the properties, these are ones where they're paying 30% of their income on rent. And then the rest of it, is made up from a rental subsidy or other program at the property. And so when you say where are other people living, a lot of people are living in properties where, unfortunately, it's a high cost of living, and they're paying 40, 50, 60% of their income on rent. And it's a pretty, when you go through, what does that happen? What does that do? When you spend too much, you need housing. And so when you spend so much of that on housing, it's usually your first check that you write to make sure you cover the rent. Then doesn't leave that much else for other, services, basic services, even like healthcare and, your, other needs of the family. And then, even, when you say, hey, you want to improve your life, kind of get additional education, additional trainings or other things, it becomes something that becomes almost near impossible. So it's sort of a key foundation that you want to have. But yeah, I think people are living in properties that are unaffordable is where most of them are. And then obviously there is a segment that is homeless, which is another one. But I would say it's both people who are homeless today, but also people who are living. The bigger I would say category or bucket would be people who are, living in properties where it's really unaffordable, and it's, putting them basically into poverty because they can't meet the needs of other things for their family.
Yeah, no, it's a great service. So where are you looking for acquisitions? Still mostly in New York or in other areas of the country?
Yeah, we're based in New York, but we're a nationwide platform, and we're in 7 states today. We're in New Jersey, New York, New Jersey, Maryland, Pennsylvania, Maryland, Florida, Illinois, Rhode Island, and expanding to more. And it's really the high cost urban areas is really our main target. And that's really where you have the greatest need for the affordable housing, and also where there are plenty of these properties that are ripe for preservation. And we are expanding out to the West Coast, over the next couple of years, and we'll be nationwide fairly soon.
Nice. So interesting. When you look at your role and how you're developing the company, are you finding any other peers that are joining you in this quest? And are they competitors? Are they others who are interested in just good outcomes for society?
Yeah, we definitely have competition. There's other groups who do, who invest in the space, and there's other groups that, have a focus on preservation. I think the things that make us unique is that this is all we do. It's not one arm of our business. It's not one strategy that we're working on. And so I think that really does differentiate us, because we're able to really think about it, every aspect. How do we do it a little bit better? And how do we build out our systems, our process? How do we attract the best talent? I mean, I think our people are the best assets we have. I mean, we have really great, really talented and diverse, team that's bringing really different backgrounds and experiences to bear, and to try to make our product and company even better. We do have, you have groups that are developers that are, that have built affordable housing and maybe get involved in some of the preservation. And you have groups that manage a lot of capital and, big institutions. And then they say, hey, this is an interesting asset class, and they invest into it. That's a growing part of what we're seeing. And there are, a couple other groups that have, raised funds like us within affordable housing. But for the size of I would say for the size of the market, there is more limited competition than what you would expect to see. And so I think over time, there's going to be more groups that look like us. And I think that's going to be a good thing for the industry and for the residents, because there'll be more capital invested and competition to deliver better products.
Well, you've had some great success with this whole segment, and you've had some good background to lead you to a point where you know how to achieve success, which is great. What are your biggest challenges as you address this and try to grow and serve the mission that you're looking to achieve?
Yeah, no, so we're big ambitions, really big ambitions. I think really the sky is the limit of what we're doing. And I really think, we could scale up to many times where we are today, but we're really not focused on being the biggest. We're focused on being the best. And it may end up being we're the best, and that leads us to becoming the biggest, but really trying to keep the quality and the standards, not just keeping it at a level, but constantly thinking, how can we make it better? So I think as we're scaling, the business is really complex. Each deal has its own unique challenges. And I think the challenges that are things that I think about, in my role is, how do we go from those, 7 states to the 12 states, but keeping the same standards, as we grow. And it's going to be around, really building good systems and process, but also getting great people. And we spend a lot of time, my partner and I, of really thinking about that aspect of, we started this where, both the two of us were very hands-on with everything. And I think we're able to, the kind of the normal story of an entrepreneur. At first, you're just kind of doing everything, and your handprints are on everything. And then as you scale, you really need to build out a great team. And we've done that. And I think that's something that, as we scale, is going to be the key challenge to think of. There's the normal competitive challenges where other people are going to be doing this. That actually is, less of a concern as we continue to get smarter and use data, from past projects and past transactions to make better decisions going forward. I think we'll continue to set ourselves apart. But yeah, I think it's just sort of how do we keep scaling this and keeping the quality high and not changing that approach, as we grow, because we're getting a lot more interest from investors, and we've been doing really controlled growth is really kind of what we're doing to make sure we don't bite off more than we can chew, or do anything that's too much but I think that's we're going to be doing this for a long time, and I think we're really built a great platform, and it's addressing a need that is really important and growing.
It's interesting as we've done the more and more of these shows, Jason, to understand who's listening to you and I right now. And we figured out through the tracking of listeners that we've been heard on 6 continents.
Oh, wow.
We're still holding out for Antarctica, but that's a whole nother story. But, a lot of folks around the world are very interested in the American entrepreneurial spirit and how we operate in America. So considering the fact that we might be talking to some people outside of America, is there any kind of overarching message you'd like to send to the people of the world about affordable housing in America and how you're operating and how you're addressing your market?
Yeah, I would say from an entrepreneurial side, I think this is, I guess, first from the entrepreneurial and maybe go into the affordable housing. I would say a lot of times people are like, man, this should be done this way or another way. There's a better way. And sometimes people they kind of are like, well, if it's not being done, it's because someone must have tried it and didn't figure it out. And you kind of talk yourself into why whatever your idea may not work. But I would say what I found from my own experience is, there's a good chance that if you see that there's something should be done a different way, or there's a better idea, that there's an opportunity there. It's really because things are constantly in motion, doors open at different times, and really the reason why you're seeing that opportunity is because you are where you are at your point in time. And so I think from an entrepreneurial standpoint, I think that's something I've always thought is one of my big wisdoms. It's don't assume that it's, the reason it's not being done is because, someone else tried and failed. It might be because no one's done it the way you're thinking about it. So I think that's a big, maybe motivational thing, is people around the world that you may see something that's could be done better, and you're motivated to try to see that happen. I would say explore it further, because there could be an opportunity there. And then I would say, I think some of the bigger societal problems or challenges, like the need for affordable housing, I'm a big believer in sort of social entrepreneurship and in finding, for-profit solutions to some of the social problems. And I think is the benefit of that, if you are able to find that and make it, profitable and sustainable, it'll attract more investment. It'll attract more interest, and you can do that at a bigger scale. And so I think, as I think maybe get, affordable housing, if you just focus on that there's a huge need there. And I think, similar to what, the needs are, people need places to live regardless of what continent you're on, and people need quality housing. And I think with the internet, one thing we do is we're putting Wi-Fi into really all of our properties now as a basic amenity to the residents. But what that does is it attacks the digital divide, but it also allows you to stream, education and telemedicine and other services. And I think in a lot of around the world, there's probably opportunities to do something similar of, using the home as a way to get people more connected to what's going on with the innovation in the world. And so, but I think that's great. If there's, I love the idea that there's global audience, and that's pretty cool. Pretty cool that you have this.
It is cool. And, and maybe part of another thought process here would be that, the American democratic capitalism type system it is unique in one sense, that some folks want only a business solution to everything, and some folks in certain countries want only a government solution. But what we've carved out here is a partnership between government interests, societal interests, and business interests to do good for different segments of the economy. In this case, the affordable housing market, and so that's a great message, I think.
For sure, for sure. A public-private model is could be a great solution to a lot of problems.
It would be. Well, great. Well, you've been a great guest. We really appreciate you being part of this and telling everybody your story and creating a model and kind of a vision for how partnerships like this can be done in a very effective way and help society. Entrepreneurs can prosper as well from doing it. It's the classic win-win, win-win-win, and all that other great stuff, right? So.
Yeah, no, it's been a pleasure, and it was a great experience, and thanks for having me on as a guest, and hope to your audience they found it informative.
Thank you, Jason. Appreciate your being with us, and good luck with Hudson Valley Group, and thanks everybody today for being with us on the 4-Star Today's Market Explained interview series today, and we're looking forward to doing some more interviews with other really smart entrepreneurial people again soon, like Jason. So thanks everybody for being with us. Thank you again, Jason. And we'll leave it there for today. Bye-bye now.